Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So we are currently in a season, as I'm recording this, where a lot of folks are catching up on their books from last year, from 2023. And what's happening is a lot of folks are transitioning into new relationships with bookkeepers, accountants, tax pros. And one thing I'm seeing from the clients that I'm either inheriting or the clients that I'm working with in CFO On Demand is that they're bringing to the table a set of books that, albeit they are done and they are done pretty well, but they're missing something major. And I wanted to share that with you because this is something that's not talked about enough, that when it comes to your bookkeeping, let's just use QuickBooks as an example. I'm going to just assume that generally a lot of people are using QuickBooks Online at this point. And if you're using QuickBooks Online, there are a number of generic accounts that they give you, a certain number of accounting term-based general accounts, which, by the way, absolutely hang on to those. I'm not going to say anything bad about those. However, what is underappreciated is the amount of customization you can actually do in QuickBooks Online if you know what you're doing. And I know that's the big asterisk, right? If you know what you're doing. This is where the help of a bookkeeper is exceptional, because if you know how you can organize these accounts, basically, if I were to, I'm going back to my childhood days, bear with me, because if you can relate to this, I used to love, one of my favorite things was back to school shopping. And I had the 5-star notebooks. I had the Trapper Keepers. Hey, in elementary school, I had all my favorite supplies. But you know what I did? Every folder, math was red, science was green. Don't ask me why. But I would organize everything into these lovely folders. I would label them nicely and I put them in a nice order, and everything was crisp and clean, and everything had a place, and I knew it was supposed to go, and I knew where I was going to be able to find it later. And I kind of adopted that into my bookkeeping. And what I mean by that is when you go into your QuickBooks, you have the ability to create these categories, create a structure. You almost have a blank bookshelf in front of you, and you can label all your binders the way that you want to and put them in the right order and make it look really neat and tidy. And if that excites you, cool, you're my people. But even if it doesn't, bear with me, because this is going to make so much sense, because you're going to be able to use this in a whole new way. And let's unpack what I mean by these accounts and how to do this. So there's this thing called your chart of accounts in QuickBooks. You can get there by typically going, if you're in QuickBooks Online, you go to transactions, and then it's one of the sub menus underneath that, where your bank feed is, where all those transactions are that you allocate. There's actually a little tab in that menu to go to chart of accounts. What those are, all the different binders and folders that you can put your transactions in. So if you think of every transaction like a receipt, these are the binders, the accounts, and then the folders, the sub accounts within those binders of where you're going to organize everything, so you know where to find it later. That is what you need to be thinking of this, like a blank bookshelf where all the labels are there for you. Now, they gave you some binders that you can use, but you are not obligated to use everything they gave you. And if you have a specific type of industry, you should be using relatively custom accounts. Also, if you have various offers, let's talk about that. If you have different types of offers and you want to be tracking the income coming in from those different offers, you're going to use something called income centers. Now, this is not like a QuickBooks term. This is a accounting kind of term. But if income centers are used, you can really dig deeper on what is bringing in money. And by income centers, I mean sub-accounts under income or various income accounts. Let's use some examples. If you run a coaching business, I would say one-on-one coaching, group coaching, course sales. If you run a law firm, we're talking about, let's say, estate planning, contracts, and other business law. If you run an accounting firm, it's, tax prep, bookkeeping income, etc. If you run a clothing manufacturer, it could be, retail sales and online sales. If you run a hair salon, it could be color cuts. It could be men, women. It could be, maybe you have a hair salon that also has a nail salon. So maybe it's hair and nails. It could be anything. And none of this even has to match what you're doing, but you have to get clear on what it is that you care about seeing broken out on your accounts, because most often you're just going to see this account called sales and you're going to lump everything in that account. Now, I don't agree with doing it that way because you miss such an opportunity to break out your sales into a more granular form so you can actually see what's comprised of your sales. How much of your sales are recurring? How many are non-recurring? How many are project-based? So even if you're not breaking it out by offer, you could be breaking it out by recurring revenue, and you could be breaking it out by project-based revenue. And one of your goals might be increase your recurring revenue every month. So then you run a profit and loss. You get to see it over the last 12 months and you can say, my recurring revenue keeps going up. That's good. I want to see that trend, right? So these are some of the pieces of value you can get from using different income centers. Now, conversely, I'm going to jump right into flip that, and we have cost centers. And there's a ton of playing room here because your expenses are far more voluminous in types than your income typically. So you've got all these different types of expenses. You can categorize them. You can call them whatever you want. You can relabel them. And the best part is that you can customize them to whatever names you want. And you can use as granular as you want to. But you have to be careful with these, because if you go too granular, let's say you're using advertising and marketing, and you have an item for Facebook ads and for TikTok ads and for YouTube ads and for an agency that you use and for photography expense and for whatever. That's fine. And that may actually serve you. So you may want to do that depending on if you want to see that granular of detail. But you might be able to get away with paid social media ads, right? And lump a bunch of that together. You might be able to get away with brand photo shoots and content production and put something in there. So the level of detail is really dictated by the level of detail that you really think is worthwhile. Because what you may not realize is that the benefit may not outweigh the cost in some of this tracking. So if you get an expense in and the categories are so granular and so high in volume that you're like, which of these 30 accounts does this go in? I'm not even sure. You're going to shut down and not even do your books. So it has to be simple enough that you can find the home really quickly, but also valuable enough in its specificity that you can actually get something out of these reports. So you got to find that happy medium, and everybody's a little bit different. What I highly recommend you do is, if you have a bookkeeper, now this is my firmly held belief that if you have a bookkeeper, one of the first things they should do when they onboard you is a chart of accounts redesign. Hands down, that is meeting number one. Tell me about your business. Tell me how you make money. Tell me about the questions that you need to answer. Tell me about the decisions you need to be making. What are the burning questions that keep you up at night? What are the ways that we can help with that through presenting this on your books, and then have them help you redesign your chart of accounts. Now, if you're listening to this, we're early enough in the year, still in Q1, where you can enact those changes going back as well to January 1 of 2024. So keep that in mind, that you're going to want to really revisit your chart of accounts design, Marie Kondo it a little bit, keep it organized, and work with your bookkeeper to make that happen. And lastly, I'm going to go through one more tip I have for you, other than just keeping the level of detail where it should be. I'm going to be really specific and give you a couple of tips on what you can do to make your tax accountant really happy. Okay. So there's a couple of things that need to be separated on your books that can't be lumped together, or shouldn't be lumped together, or will provoke questions if they're lumped together. So this is a great way to avoid those CPA questions. Number one is your business meals. Is make sure that if your business meal was done while you were traveling, you put it under travel somewhere, or it's designated as travel meals, because those are 100% deductible. So make sure that's separated from business meals, which are 50% deductible. If you're putting everything in business meals, you could be missing out on half your deduction. So make sure you know what is 50 or 100% and it's in the right category. Secondly, if you are an S corporation and you pay yourself officer compensation through payroll, separate the officer compensation from the salaries and wages account. So actually have that separately tracked as a separate line item on your books of what your salary was. And that is actually something that your bookkeeper or your CPA or tax preparer will have to actually enter in your tax return. So that will do them a big favor. And lastly, separate out charitable contributions. And separate that out, I recommend at the very bottom under other income and expenses, because what that will do, it will drop you to the bottom. It will drop that account to the bottom, and you'll be able to exclude that from your profit calculation. Why do you want to do that? Because actually when we do your taxes, that is not a deductible expense. So it gets flowed through your K-1 to you personally. So it's a great way to isolate that. And that actually introduces another big point that I have, which is there's this line in QuickBooks. And I want you to look at your profit and loss statement next time you have a chance to. You're going to see that you have your revenue minus expenses, and you're going to get to this line called net operating income. And that may be a new phrase for you. We're used to hearing profit, but that is profit. Net operating income. I call it NOI, right? It's just easier to say. And what you may notice is that net operating income then has a section underneath it for other income and expenses. And then there's net income at the very bottom. You may be inclined to just scroll to the bottom and look at net income. But here's what I want you to do. I want you to give NOI, net operating income, a purpose. And what I sometimes recommend people do is if you want to see the net operating income before certain expenses, like your officer compensation, like your charitable contributions, like, vehicle expenses or other things that could be personal in nature, or your accountable plan reimbursements that you're paying yourself for your home office. If you want to see your numbers before that cash flow, before that money that goes to you, you could put all of those and organize them so they go under other income and expenses. So that way you can read net operating income and realize that your business is actually profitable. And it may not look profitable because you're paying yourself a high salary, or because you're taking reimbursements, or because you're donating a ton to charity, all of which are good things. But you may be discouraged, or you may be fooled by your own numbers because you may not realize that you're doing better than you think you are. So I always encourage you to make use of that net operating income line and group some accounts underneath that so that you can actually take advantage of seeing what your business is truly creating when it comes to profit. So those are just some core tips that I would give you in your books to do a little bit of a better job of tracking and actually start using your books as a tool to make decisions. Because if you're just operating by default and not by design, then you're really not going to get a whole lot out of the bookkeeping. And frankly, you're going to miss a huge opportunity to be able to work with someone who can help you with this and to take advantage of everything that your books can provide you as a business owner for insights. So if you'd like any additional help with reading your financial statements, implementing anything I talked about today, or just getting some tips on your own books personally, this is a perfect example of what we do in CFO On Demand, especially for our VIPs. As a VIP member, you get a 20-minute one-on-one with me monthly. Bring your financials, bring a burning question that you have. You can sit down with me and we can actually attack it together. And at only $99 a month right now, this is a steal. This is designed perfectly for those business owners sub 500,000 in revenue, below 500,000 in revenue, that just need that extra little bit of help or that little bit of encouragement and insight to help them scale to that $1 million level. So if you're interested in that, head to the link in the show notes to learn more about CFO On Demand. I'd love to see you in there. One of the best decisions I made in business that saved me countless headaches was getting expert advice in HR as I started growing my team. With so many compliance requirements, especially for virtual businesses, I could never get caught up on everything I needed to learn or I was supposed to do. That's where Jackie and her team at People Principles came in with their signature HR audit for only $349. But get this, if you use code Shannon50, you get $50 off of that. So it's only $300. You'll have peace of mind by the end of the week with this exclusive offer as a Keep What You Earn listener. Here's what's included: a step-by-step self-assessment, a 60-minute strategy session with their HR experts to ensure that you're in compliance and you have a plan for getting on track, an HR template to keep all this important stuff in one place, and a roadmap of the top 3 best practices to implement right now in the next 6 to 12 months. Again, use code Shannon50 to take $50 off of this assessment. Do not miss out on this opportunity or let unintentional HR mistakes derail your business growth. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.